Hello, Hash fans, and welcome to the Tuesday edition of this fine show on CoinDesk TV. We are joined, Will Foxley is back. Hey, Will, what's up, man? We got Will, we got Ben Powers, we got Jen Sanasie, we got Naomi Brockwell. Gang's all here. Naomi, lead us off today.
I'm going to start us off. We were going to talk about what billionaire hedge fund manager Paul Tudor Jones said yesterday about Bitcoin and about inflation. So he was talking about how the Fed is reacting to the rising prices and talking about how, they keep referring to all of this as transitory. It's going to go back to normal. So he said that if they insist on characterizing this as transitory, if they keep saying that, we're on the right path and all of that, then he is going to go all in on inflation trades. Now, what does that mean? Well, he says he'd probably buy commodities, buy crypto, buy gold. He's looking at having at least 5% Bitcoin in his portfolio. So he seems to be of the mindset that this inflation is not transitory and the Fed really needs to start pushing back and slowing down on all of the quantitative easing and money printing that's going on. So I'm going to throw this to the group and get your thoughts about, do you agree with Paul Tudor Jones? Do you think that this narrative from the Fed about this being transitory is in fact correct? I'll throw this to you, Will, to start off with.
I'm not going to argue against Paul Tudor Jones, that's for sure. His record's pretty good. But just like take a quick step back down memory lane here. Paul Tudor Jones kind of kicked off a lot of what the Bitcoin bull market looked like last year from March to May of 2020. So the price was already rising during that period, but then news came out that he had put some of his financial tokens or whatever into Bitcoin in some way, shape, or form. I think at the time it was some sort of like cash carry trade that wasn't necessarily itself holding Bitcoin, but had exposure to Bitcoin. And a year later, he's now talking about putting 5% of his net worth into Bitcoin. And earlier last year, he said about 1%. He was pretty conservative. And even that conservative 1% was seen as a huge gamble by someone of his stature, who, of course, has billions of dollars to his name. So very interesting to see that he is now proposing 5%. That is a huge markup. He has a lot of different hedge funds under his own management. He has his own family hedge fund that controls millions of dollars. He has his own corporate ones. And so it's interesting to see where Bitcoin was sprinkled into all those different groups that he controls. So all over the place, very bullish news. I wonder if it's going to kick off another bull market, kind of like he did last year. But give it to you, Zack.
I mean, yeah, it is funny to remember that, right? He was the first rich guy in a suit who really came out and said, "Hey, Bitcoin is cool," and he really did kick the bull run into overdrive. We've since become sort of inured to it, right? There's been so many rich guys in suits saying that Bitcoin is cool that I don't know if it's going to have the effect that it did last time around when he was really the first to get out ahead of this thing. But I think it does increase the conversation around inflation again, right? This is something that I think Bitcoiners truly do believe in, that inflation is going to eat into their savings in a major way. And I think traditional economists are starting to see that a little bit more. So for Paul Tudor Jones to get out in front of this and sort of, again, lead the charge on this talking point, I think is probably the notable thing for me here. Interesting to see if others pick up the baton and that becomes a bigger talking point going forward.
Yeah, I'll add to that there seem to be two different types of people who get into crypto during these bull runs, right? So I think that when you have people in suits who are movements leaders and thought leaders, they say things like that, and then a bunch of speculators get involved. But the people who are also listening are the people who control Treasury Reserve assets, who control these companies, and who are thinking we don't want all of our Treasury reserves to disappear due to inflation. So I think we have seen a big cooling off period from the speculative traders who are like, oh, I'm not going to make a ton of money because we're not in a bull cycle. But the inflation narrative is still going on. And that's what Paul Tudor Jones is talking about on CNBC. The Fed is not easing off, and they don't seem to have any plans to ease off. And he says, well, if they keep doing this, then, I'm just going to start stocking up on these inflation bets. And so I think that you are going to probably see more institutional players come in if this continues. And the other thing I'll mention is that you have different perspectives about how inflation is going to go. You ask someone like Gene Epstein, former economics editor of Barron's, and he says, well, in the next 10 years, there's a potential that we might see hyperinflation inflation, the total collapse of the economy, all of that. And he's generally pretty conservative in his estimates. You have someone like Brian Brooks who says, well, he doesn't think it's necessarily going to be a collapse, but we've seen a 40% increase in the money supply in the last 12 months. So, that's a huge number. It's huge. And so we really need to be paying attention to that. And then George Selgin, noted economist, says, well, he pushes back on the hyperinflation narrative, but still says that inflation is still a pretty big deal, and we should be paying attention to it, maybe not overstating it, but definitely talking about this erosion of people's savings. So it is interesting, like even those three perspectives are still talking about like increased inflation, even though they vary on the degree to which this is going to happen. But Jen, I'll throw this to you.
Naomi, I think I've said this on the show before, and I just wanted to get your opinion. We talk about Bitcoin as a hedge against inflation. There's massive regulatory concern. It's extremely volatile. Like we've said on the show before, don't put anything in there that you can't afford to lose. Just for the everyday person who's watching this, who is looking for somewhere to put their money as inflation rises in the States, is Bitcoin a solution for them, or should they be looking to commodities or gold?
Well, I first of all do not give any investment advice, nor does anyone on the show. But I used to say don't put in more than you're willing to lose. But that was in 2012, 2013, when it was this crazy thing that we didn't really know what it was going to become. I don't say that anymore. I say people, I think it's a good idea to put in a single-digit percentage of your portfolio into Bitcoin for sure. Obviously, people need to figure out their own risk parameters and what's suitable for them, and everyone needs to make their own own decision there. So, I mean, it really does come down to an individual choice and figure out, your own risk parameters. But let's change tracks here. Zach, what's next?
Let's talk about more hedge fund guys. So we're going to talk about the Bitwise funding round, first reported by CoinDesk Danny Nelson this morning. You're going to see a lot of this on other networks as well today. Bitwise is a crypto asset manager, has a number of investment vehicles that give people access to crypto, anything from a DeFi index fund to the Crypto Innovators Index, which tracks the stocks of prominent firms in the space that are publicly traded. So they raised a big round, $70 million, valued at $500 million, certainly a notable funding round, and also notable just by the fact that it included investors that were described by the lead investor in this story as legendary people. So we have Stanley Druckenmiller, we have Daniel Loeb, with big hedge fund guys, and also some prominent crypto investors joining this round, thinking that Bitwise could be a lasting institution for people to access cryptocurrency investments in the future. I think this is sort of like, this is one of those big rounds that we've forgotten that we were seeing a lot of these, I think, before the downturn. And now we're seeing these big rounds, high valuations, suggesting that people think this term has legs. Suggesting that people think this industry has legs for the long term. I'm going to throw this to you, Jen. I mean, when you see a big round like this for a crypto asset manager such as Bitwise, what are you thinking? What are you thinking? What's your take?
Well, I don't think it's been that long since we saw a big round. I mean, I feel like everything is just moving so fast. But for this story, what I took away from it was that quote that the CEO said. He said that in the next decade, most Americans will own crypto in one way. And he said they're not trying to trade events or outsmart the market. They're just going to want crypto to fit in with the rest of their investment lives. And I thought that was really a really interesting way to look at things. And I mean, I think I agree. In the next decade, I think most Americans will own crypto, and it made me I don't know from this big round, it feels like we're taking the next step to get there, and I think we're going to see it even sooner than the next decade. But I'm going to throw this over to Ben. We haven't heard from you in a while.
Hedge funds. No, I think that this thing, there were a few data points that stuck out to me here, particularly in regards to the volume of financial advisors that they were working with. I believe they said they doubled the number of those since January even this year, which totally tracks with the bull market we were seeing. And I think that, this big funding round, and we say we haven't seen one for a while. That being said, it's only been a few weeks, right? It feels like a long time for one not to pop up, but that's because they were coming so hot and heavy for so long. And I think, in line of recent sort of the downturn in the market and people kind of worrying about that. And then we're like paying attention to Elon Musk's tweets, and we're like doing all this other stuff and looking at, social media and who's saying what and what Paul Tudor Jones is saying. I think like these funding rounds that we're seeing and the ones that we've seen that kind of branch out from just being purely crypto to more kind of like a crypto adjacent area around cryptography, around privacy, really show that there is kind of a lasting belief that, you get in now and you can make money down the line because these institutions are going to continue to gain value, which is sort of by proxy an investment in saying, you believe in cryptocurrency having its staying power. So that's why I'm seeing this as maybe it being a positive reaction to a market that we might consider in a downturn currently. But yeah, that's sort of my immediate thoughts on the subject, outside of the fact that, Jen, is this like a live NFT headshot you have going on, or did you die and go to heaven? Like, where are you? You're on like pure light zone.
Why does everyone, the control room, when I logged in also, they're like, you're looking so angelic. No, I mean, I'm just in a very bright room.
Man, that is some natural light. Anyway, those are my thoughts on this one.
Yeah, I'll jump in there. I mean, you have like giants like Druckenmiller in there. I mean, what we know about Druckenmiller, he's like super, super famous, especially for shorting the British pound back in, I think it was 1992, right? So realizing that the British government did not have enough reserves to keep their peg. And so he went all in on shorting them. And Soros really kind of egged him on and taught him, if you have this once in a lifetime opportunity, you go all in, you don't diversify. I wonder if that's something that he's applying to a situation like this. I wonder if he sees crypto as a similar opportunity and is just going all in, or whether it's just one of many diversified positions that he's holding right now. It'll be interesting to ask him that sometime. But Jen, what have we got next?
All right, coming straight from the heavens. So Goldman Sachs has labeled crypto as not a viable investment for diversified portfolios. So in a new report for its clients, it listed high energy consumption, scarcity of regulated exchanges, and the risk of greater regulatory oversight as some of the reasons behind the advice. So I'm just going to throw this out to the group, kind of the opposite of what we've been talking on the show so far. It's a little juxtaposition. Will, what did you think when you read this story? Or Zach?
I mean, didn't Goldman Sachs just relaunch its cryptocurrency trading desk a couple of months ago? So yeah, I mean, I think this to me sort of like, we treat institutions as these big monoliths, right? And they speak with one voice and one unified message. I think this to me is actually really interesting because it sort of suggests that that's not necessarily the case, right? These are big organizations with different teams who often have competing priorities. And I could imagine some people on the cryptocurrency trading desk being like, what the hell, guys? Like, we just launched this business line for the first time in 3 years. What are you talking about? So that to me is kind of like the interesting sort of thing that this hints at. But yeah, I don't know. I'll throw it back to you, Will. What do you got?
Yeah, I don't understand why this it's like a boomerang, right? It's like you throw it out, say Bitcoin's good, Goldman Sachs gets some money from that, and then it comes back in, they catch it and say Bitcoin's bad, and they get the price on the way down too when they liquidate people. So it just seems like kind of crazy. They keep going back and forth. And that, I think, is like the larger issue with these companies that have just been around for so long, is that they're not in the corner of their customers. They're in their own corner, and they want to profit themselves, and they're not helping out the little guy in my mind's eye. And that's just like me from reading headlines from over the past year, or even 2-3 years, where Goldman Sachs has consistently been against crypto, and then when it's advantageous for them, they say, maybe you could do a little something with crypto, and then immediately come right back. And so I don't understand. Maybe it's something to do with like the larger structure of Goldman Sachs. There's a lot of people who work there. There's a lot of people with differing opinions, and there's a lot of people who don't report to the same people who have different opinions on crypto and Bitcoin. And so maybe there's just like inconsistencies within the firm on opinions on crypto. I just know from personal friends who work at Goldman Sachs that they are interested in it, and they are trading it internally, and that they are promoting people to learn how to use it. So there just seems to be a lot of either miscommunication, if we're going to be really generous here, or they're just being kind of aggressive against their own clients if you're going to be not so generous. But I'll give it to Naomi.
Yeah, I just want to jump on that inconsistency note, Will, because sure, there may be different departments who disagree, but what about the inconsistencies within this same report? Like, Jen, did you literally say that they're worried about the lack of regulated exchanges and worried about more regulation coming into crypto. They said both of those things simultaneously, right? So like, is there a winning scenario? Is there a situation where they would be happy with crypto? Because it seems right now that they're like, oh, well, if this thing's happened, this is bad, but this thing might not happen. It's still bad, but this other, it's always bad. It's turtles all the way down. It's always going to be bad. Like, I just, I have a lot of trouble taking this report seriously.
Yeah,
I think this kind of boils.
Go for it, Ben.
I was just going to say, I think it boils down to like two things, right? Like, you got to put out reports regularly if you're one of these institutions. And then two, if you say a lot of things and throw darts at the board, you can never really say you're wrong or right necessarily.
You're not really
you can be like, point to this thing once the kind of confirmation bias, down the line goes in your direction. So I don't know. I think it's interesting. Yeah, the Discord internally, I think, is maybe the key point here. And I think it's coming from different spots. We talked about this, and maybe this report's coming from more like the analyst side. Whereas, we talked about the crypto desk reopening up because a lot of these institutions are reacting to customer demand. So that seems to be two different ideas, and maybe we're seeing different motivations coming from it. And I think for me, there's just so many. The narratives aren't different, right? Like, this isn't completely new in terms of the issues that they're identifying. These have been kind of, part of this for the last few years now. So in my mind, it's kind of the regurgitation of that. But I think their actions in terms of like, reopening the crypto trading desk speak more to what they're actually thinking than, X report at X date that's going to come out again soon, probably.
Yeah, Ben, I think you hit it right on.
Go ahead, Jen.
I was just going to say, I think Ben hit it right on. I mean, we've been talking about energy consumption and regulation in the news, and now a report needs to come out, and let's just point to those things because everyone's already talking about it. I did want to point out one more thing that the report said. They said they were worried that quantum computing could make blockchain technology obsolete one day.
Yeah.
And yeah, so Naomi, I'll let you weigh in
on that. I'm in on that. I think we need to be worried about that a little bit more. I talked to somebody in Miami who convinced me that that's going to happen sooner than later.
Oh,
well, she talked to them in Miami.
I swear, dude.
So about a year ago, I did an interview with a guy who did his PhD in quantum computers. And so he's kind of really in on all of this stuff, a big crypto person as well. If there's one thing that quantum computers will destroy, it is the type of encryption that basically governs all of blockchain tech. But that being said, it's still so theoretical right now that we are not close to getting anywhere with quantum computing, so we've got a while. But all right. Zach, what have we got coming up after the break?
Before we pivot to Quantum Desk, we're going to take a quick break. We're gonna cover crypto for as many years as we can before it gets broken by the supercomputers, and we're going to enjoy it each and every day here on the Hash. After this break, we're going to go to China.
Zach,
we're going to talk about the digital yuan and some experiments that are going on there for wage payments. So stick with us. It's the Hash. Happy Tuesday. All right.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Hello, and welcome back to The Hash, where we discuss the latest and greatest in crypto news. So I'm bringing a small story to the table today, but one that I think is sort of indicative of the way things are moving and how quickly they are. So China's piloting another sort of program with a digital yuan about 60 miles southwest of Beijing in a city there, and they're paying workers' wages on-chain with it, particularly builders. I thought this was interesting because China's obviously been doing a lot of experimentation with this, but here's the thing, too, is they're actually doing experimentation with it and not just having hearing after hearing or white paper after white paper around it. And they're doing it in a lot of different use cases. So this was one I thought was kind of neat in a sense where you're like giving this out as a wage to somebody who's, in sort of menial labor. You're like building things. It's not sort of for an investment firm or something like this or like a white collar worker. Like it's money that's going to the people. So in that direction, I think it was curious, but I also more so think it's just one more data point to show that this thing is just marching on to the beat of its own drum and not really slowing down. But Will, I'd be curious to get your thoughts on this one to start off.
Yeah, no, I disagree with you. This is a cool story. I think it was a great selection for the day. There's there's a lot to be told about how the CBDC market kind of works out. I think in general, like my larger perspective is it's going to be a nothing burger right then, like in 2-3 years. I think it has a lot of similarities with the blockchain, not Bitcoin kind of narrative that we saw 2-3 years ago. But that doesn't mean that it doesn't matter, and that doesn't mean that there's not a lot of important conversations on it need to be had around how these CBDCs work, because they kind of highlight all these privacy concerns and also how money evolves. So when we're looking at like Bitcoin in general, we like a lot of the aspects that Bitcoin brings to the table. The fact that it's censorship resistant, that anyone can open up a Bitcoin account and just use it. CBDCs kind of bring some of those other questions to the table, especially the way that China is looking and developing their own CBDC. They've already gone so far as to talk about being able to delete money out of people's accounts if you don't spend it quick enough, which is a pretty frightening idea.
That's
so
crazy.
In general, you're totally right that like there is a larger conversation that needs to happen around how CBDCs work. And in China, in general, they're doing that quite actively compared to Europe and the US, where we're just basically putting out white papers. But in China, they have a lot of different areas all around the country where they've already been doing this. They've been testing it for months now, even years at some point. And they have public blockchains that they're trying to plug in different ones like Ethereum and Polkadot into their own Chinese blockchain variant. So give it over to you, Naomi. But yeah, great selection for the day, Ben.
Yeah, I'll add that I am not at all excited about governments moving ahead fast to mandate yet another fiat currency. I love the private sector moving fast. I love innovation and all that, but I don't love mandates and I don't love coercion, which is what this is all about. As Will highlighted, there are just some terrifying things about this central bank digital currency, like the ability to delete money out of people's account if they're not spending it fast enough. There are lots of things like that. It's not an exciting prospect for me, and I'm glad that other governments are moving slowly in this and just putting out white papers. I think there's a great quote, like, just be grateful, you don't get all the government that you pay for. So I'm glad that other governments are not rushing ahead and putting out things that would lead to more mandates and most likely less privacy, because if we're judging by previous policies in terms of how banks are run and how our money can be transferred and all of these rules, I mean, I think central bank digital currencies are just going to be another way for money to be tracked and to erode individuals' right to financial privacy. So definitely not excited about any of that at all. We're looking at like things like in El Salvador with the mandate there that people have to accept Bitcoin. We've got this mandate here about central bank digital currencies. Like, there's just mandates all over the place. I love crypto because it gives people a choice, the freedom of a choice that they can, of their own volition, decide to use or not to use. Although we are seeing such momentum behind different countries around the world adopting different cryptocurrencies, I'm not excited when that momentum is coming from government mandates at all. But Ben, I saw your hand go up.
Yeah, I think you brought up a really good point in looking at El Salvador in this too, because I want to zoom this out a little bit and look at the fact that we accuse China of authoritarianism, using CBDCs to that sort of end as a coercive mechanization of money that they can control ultimately. And I think that it's been really interesting watching Iran, watching North Korea, watching other countries dabble in crypto from a state perspective. And now we see El Salvador, which also does have some authoritarian tendencies, really diving into Bitcoin. And so I don't know how exactly this might happen, but I think it's a really interesting question to see. You see these two countries taking divergent paths, but I think that might have some similar interest around the control of their own citizenry. And so, when I'm thinking about Bitcoin and how that plugs into El Salvador, for example, because they're also moving quite quickly on this, I'm wondering about things like what might be the case when the sort of $100 million fund and bank fund that was set up to transfer that Bitcoin into US dollars, how might they exert control there in some ways if they choose to do so, if this starts being disadvantageous for them. So I think these are parallel tracks, but we're seeing countries that have these tendencies dive into both CBDCs and crypto, and where they meet in terms of how they're trying to use them, I think is going to be a fascinating storyline. I think,
usage mandate aside, I think the open, Bitcoin is an open network, right? There's no way that President Bukele in El Salvador could remove Bitcoin from a citizen's wallet should they choose to save it rather than spend it,
unless
right?
it's a custodial wallet.
Well, that's a good point. So the devil is in the details on that. But but if we look at it sort of in abstraction, right, you have these open networks versus very closed and controlled networks. And the fact that we're seeing these things now kind of emerge, as you said, Ben, in parallel with some diversions, I think is going to be really interesting to watch out. It's really interesting to watch for as we see other countries either go down the path toward embracing open networks for digital currency, or choose to take the more like digital yuan controlled central bank digital currency approach. So it is really interesting the way I think that the El Salvador news heightens the conversations around CBDCs right now.
Yeah, and I'll add to that it really is a battle between physical cash and cryptos or digital monies right now, whether you're using custodial wallets with Bitcoin or whether you're using a central bank digital currency, right? A lot of these places, people love cash. They love it because cash is the most anonymous way to transact. So when you have governments come in and mandating, well, you got to use our central bank digital currency, like you really start to eliminate the cash sector. And it's what governments all over the world are doing right now, putting bans, like in, I think, Italy and France, you've got a 1,000 euro cap on the amount that you can pay in a single transaction using cash. In Australia, it's like 7,500 USD. So, bans all over the world. And I think it's just going to escalate as we go forward. But let's change track. Will, what have we got now?
Yes, less geopolitical here. We're going to move over to DeFi, where we have another funding round. So Dydx, which is a San Francisco-based derivatives trading firm, raised $65 million in a C-Series raise. Is joined by CMS Holdings, CMP Digital, Electric Capital, Hashkey Capital, and a few others. This is their third funding round in the last few months. They raised $10 million in both a Series A and B. I think earlier this spring and maybe in the winter months as well. What Dydx does is allow you to trade crypto derivative products on DeFi. So there's no person behind the curtain. It's just an exchange computer trading with you or orchestrating trades with other people on the platform. So it's a pretty innovative product. I've used it myself. It's pretty slick, which is very different from other DeFi products out there. So I think that has been a big reason for its traction. They have between, I think, $4 and $5 million of volume per day, or actually might be 10x that. Yeah, sorry, $40 to $50 million in volume per day on their layer 2 exchange, which launched in February. So pretty big raise for them. Kind of speaks to the continuation of more raises in crypto, even though the prices have been kind of wonky over the last few weeks. Kind of speaks to the fact that institutions and others are still expecting these products to make money. But I give it over to you, Zack.
Will Foxley byline on that Series B, whenever that was fun to add into the read more field this morning. But yeah, I think the thing that stands out to me is who led this round? Paradigm, right? Which is founded by Fred Ursum, a Coinbase founder. The idea here that they're putting a big bet on a decentralized exchange, one day rivaling the likes of Coinbase, is really interesting to me. And I think some of the volume numbers, the profitability here, some of the details that are in this piece sort of put some meat on those bones. I think we've been hearing about decentralized exchanges potentially unseating their centralized counterparts. Seems kind of far-fetched. But now that we're getting sort of big volume, big numbers in terms of building out this thing to be even bigger and better, that reality starts to become a bit more clear. And I think that's really interesting that someone who has made his paper by building the US's leading crypto exchange is plowing those returns back into something that could one day unseat the king. So that to me is really interesting. I got to throw it to the cat. I mean, Ben, what does he have to say?
What's her take? She jumps in my lap from time to time, and I usually keep her out of camera, but today she got to make an appearance. No, I think for me, this, we talked about Fred Ursum, who, was one of the founders of Coinbase, getting in on this one too, and that's interesting. She's back in my lap. And I think that was interesting just because Coinbase has pointed to DEXs as like a threat to them when they were filing to go public, right? Like that was one of the things that was on their radar. And so this does seem to nudge it a bit in that direction, right? It's hard to imagine that they're going to totally overtake centralized exchanges. But I think also to the point about these big funding rounds that we're discussing throughout this show, one of those isn't crypto custody assets. One of these is around DEXs. It also shows a broadening ecosystem of where people are putting their money. And I think that's really interesting because that, again, if you're building that broader base and you're getting a lot of funding behind all of these things, that again speaks to an overall kind of parallel financial system that's being built. And that's kind of the whole idea of this. So this is another data point in that regard, but that's sort of my larger takeaway from this specific round.
Yeah, I'll add to that and say what the founder was saying about why DEXs may potentially overtake their centralized counterparts. He offers the points potential censorship resistance, transparency, and security to traders, which are all major concerns, to be honest. Like, I think that these days we tend to take for granted that exchanges are pretty safe because we think of them akin to like banks, and they're regulated now and everything's fine. But even earlier this year, you had a guy in Turkey who just runs off with billions of dollars of users' funds. Like, these exit scams still happen, and we shouldn't ignore that. So there is a big risk to centralized exchanges in terms of that counterparty risk. But then censorship resistance, we've talked about that a lot on the show as well. As soon as you have these centralized entities that can be controlled by governments, stopping funds being moved, they do stop funds being moved. They start to sanction different addresses for whatever reasons. And so transparency is the final thing that he mentions, which I think is also so important, because we're so used to this world of opaque finances, and we don't really know how much reserves Chase has, and we know what they're mandated to have, like this fraction of all of the amount that they're meant to have on hand. And so I think that just adding transparency to the narrative is so important, and it's really something that crypto can offer, and especially something DEXs can offer. So definitely excited about that world that he's describing there. But I think that that's all the time we have right now. So Zack, take us home.
I'll take us home. We are wrapping for the day. Good show, everybody. Will, Jen, Ben, Naomi, Jen, stay angelic, my friend. Stay angelic,
Will,
my friend.
Jen,
I'll try.
Will,
Naomi.
great dude. All right. Cool. Well, that's
Cool,
that
man.
great.
Cool.
That's that excitement you get on CoinDesk TV every day at 12 noon with the hash. So stick with us for tomorrow. We also have 3 p.m. all about Bitcoin. Another great show on CoinDesk TV. And yeah, we'll be back again on Wednesday to talk about more crypto news. So stick with us. Have a great day. And bye.
See ya.
Cheers.